Good morning, traders. Happy Wednesday. It's the 16th of March, 2016, 8:01 a.m. Chicago time, 9:01 Eastern. This is another Trader Bite. Thanks for joining. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The overall market position right now, market sentiment, we have crude pushing near highs for the session, up 1.8% or so. U.S. dollar is relatively strong. The Bund is relatively strong, and gold is just above flat. The market is trending down currently, mostly on jitters of the FOMC today. The FOMC announcement comes out at 1 o'clock Central, 2 o'clock Eastern. And then we have Fed's Yellen speaking at 1:30 Central, 2:30 Eastern. The market just came out with the CPI and housing starts. The CPI came in line at negative 0.2%. Ex food and energy is actually stronger at 0.3 versus 0.2%. CPI NSA index came in at 237.111 versus 236.873. But more importantly, the CPI year on year is at 1% versus 0.9% expected. Year on year ex food and energy, it's at 2.3 versus 2.2. This increases the room for the Fed to raise rates. There's actually approximately a 4% chance priced in that there would be a hike today. But I think the traders will likely be very, very cautious and will listen very carefully as to what Yellen's comments will be. In addition to that, yesterday we had the primaries in a few major states: Florida, Illinois, North Carolina, and Ohio. And it looks like Donald Trump got is most likely to get the Republican nomination here in the U.S., with Hillary having the Democratic nomination. And that's likely to set things off and cause some jitter in the market. Oil prices are stronger. The OPEC is going to meet on the 17th in Doha, Qatar, and April 17th to discuss the oil freeze. Oil should be fairly interesting for the next month or so as more and more news comes out on this oil freeze. So there's a fair amount here for the market to consider. All of the indices are down, with the Euro stocks being down the most, but it's not that bad, 0.68% or 20 points. The S&P is down 8 points or 0.4%. The Euro's down slightly. The treasuries are also slightly down. So the market is in a defensive stance as it stands right now, even though the yen is also down, oddly enough. But the market is in a defensive stance coming into today's session. Let's look at what we expected yesterday versus what we got, so we can review how we got here. So this was the primary hypothesis. For those of you who watched yesterday's Trader Bite, you probably saw that the primary hypothesis was expected to be an open, a potential test of the overnight low. The overnight low is 95.75, and then we expected it to push to around 2002, 2003, chop around, rotate down, and likely to break and hit the 79.75 if it can get into the range from last Thursday and get below last Friday's low. And the market was unsuccessful doing that. The secondary hypothesis that I covered yesterday, this is approximately 10 minutes in to yesterday's video if you want to review the reasoning behind it. The second hypothesis is chop. There's, as I said, the overnight The overnight profile was very B-shaped with a lot of volume at the low, so I expected the low to be taken out. Not sure why I didn't draw it that way. But I expected the low to be taken out and then looking for a pop. And then I was targeting the 2006.75 being the point of control of what was a very balanced trade on Monday. So that was a high probability tag. If we got into the 2002, 2003 area, then 2006.75 was our target for the session. So that was what was expected. Now let's see what happened. Here's our 15-minute. And remember, 95.75 was our overnight session. So the Hypo 2 worked out exactly as planned, as anticipated. A test of the overnight low, chop, 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 and then eventually it pushed its way right into the 2006.75, which was the point of control from Monday. As expected, it got through it by a tick, just for good measure. A pretty steady, pretty noisy trade in the morning. Once it broke into the prior day's range and held there, it pretty much continued. The best opportunity in the day for me personally was the pullback to the mid, to the IB high, which was a low volume node. You can see there's a notch out here in the volume with the mid and VWAP and OS to back it up. That was really the only, in my opinion, the only clear shot of the day. There were opportunities to scalp, of course, as there are every day, in my opinion, but the real clear setup for the day yesterday was the pullback once we broke into the range. We had a very, very clear intention by the market. Also, in the morning, it immediately broke the overnight high by a tick. The overnight low by a tick. It also broke the Friday low by a tick, and it got a quick pop up. It showed that the market was really fighting any attempts to push into that lower range. This 95.50, 95.75 area is key. You might want to mark it on your charts with a reference line. Once the market pushed up and rotated down, it got only 2 ticks through it to 95 before it popped back up. What you have here are what are called 1-tick failed auctions on both tries. This is a strong indication that that buyers are dominating. Early on, I thought it looked like sellers were, so I put out a caution to the longs. Was looking for this to actually follow through, but clearly buyers were dominant here, and kept a good bid on this. I posted it in the S5 chat room that you got to look out for those 1-tick failed auctions. They do make a very clear indication as to what the intentions are, given that we are in a gap zone between between Monday and Thursday's range. So this area was bound to give us some turbulence here. This is a gap zone here, a very short-term gap zone, but still. We did continue to take the market up into the prior day's range, into Monday's range, and we finished in a picture perfect auction finish there. And then from there, the overnight session continued to drift higher. So the black profiles, the black on white, are day session profiles. So this is basically what I was just talking about just now. So this is Monday. And this is Tuesday right here. This is the overnight session for Tuesday morning. This is today's overnight session, the blue and white. And you can see that the overnight session just continued to drift higher, taking out the last couple of days, the last couple of sessions highs, or the prior session's high. A very strong profile. It looked like it would continue higher. It looked like it would stretch the profile out to even it out. But what happened is, as the session went on and the European markets opened, it just could not keep a bid and was very, very choppy, very, very choppy overnight. session for us, and then we had the drop right at the 7:30 numbers, the CPI and the housing numbers that came through. I scoured around, looked at the Bloomberg and so on to see what the story was with this fairly decent drop, but really it was only 6 points. The ranges have compressed a lot, so things look a lot worse than they are. But really, looking at this, there's really nothing out there that would cause this other than the fact that given the numbers, the housing and the CPI numbers, they've made some positions nervous with the Fed announcement today. I believe they're looking at that as fuel for the Fed to adjust upwards. Looking out for today's expectations, the FOMC lower bound is at 0.25 to remain the same. The upper bound is 0.5, an increase of 0.25. Again, that comes out at 1 o'clock. Don't forget that we have gasoline and crude oil inventories as well. And we're getting cap utilization and industrial production here in 3 minutes. So I think the session is likely to be fairly interesting throughout until the FOMC. I would definitely encourage you to save your bullets until the FOMC is done. And if you look back at the prior FOMC announcements, generally that the movement for the FOMC unfolds in 3 waves. I've talked about this in the past. I can't get into it too much here, but in general, we have the announcement, we have a strong move, then we have a revisit of the scene of the crime, a push through, generally a push through chop, and then the real move is what follows, and that's the third wave, and that's what I'm looking for. I would not trade. It's not a great risk reward to trade the actual announcement. It is better to see which way the market is likely to push after the announcement sets in. Remember, the institutions or the bearer desks that are trading with us do need time to analyze and digest what Fed's Yellen is going to say before they commit their positions into the market or move their funds to safety. So there's plenty of opportunity, in my opinion, to gain or lose later in the day. So don't just go wasting your bullets early on. I think it's better to just sit tight and wait for that announcement. We're likely to be pretty choppy in the session today until that happens. Okay, the key figures above us, just so we all know where we're headed. The key figure above us is this MCLVN on the since the August 24th drop. This drop here in the volume is really key. The price is 2015.75, 2015.75. You'll want to make a note of that. Industrial production just came in. It was worse, negative 0.5 versus negative 0.3. Cap utilization 76.7 versus 76.9, also slightly worse. That was just released just now. But look out for 2015.75 above. And then on a rotation down, we're looking for it to fall through this 95. This 95 is just tremendous here. It's an MCLVN. And then look for the other side of this all the way down into that 79 area, 1979 area. 1983 is the low volume node. So for me, 2015.75 above is the key target. Higher. And then below us, if we break through the 95, then we're likely to push to 83. And that puts us, from where we are right now, 83 is 15 points down, and 2015.75 is 15 points, 15, 16 points up. That's about the range that I'm expecting, either up or down. We're looking for about 15 to 20 points today on the range. Okay. So here's let's look at today's action here. Coming into today, we are trading We are trading right up against the point of control. The market's trading right here, this yellow line that keeps popping up and down. That is the last price. We are opening, it looks like we're opening in range in value. The value is somewhat valid from yesterday. We do have somewhat of a fat profile. The market has found consensus, it seems, based on yesterday's action. The value area is 2,350 to 9,650. Again, the point of control is at 99 even, which is where we're trading. I expect the market to be choppy. What I'm going to watch out for, so the hypothesis for today could go either way. The point of control has shifted down yesterday, and the market retested and held that point of control. It went through by a little bit, but in general, the market has fallen back below the point of control. There's a slightly better probability, in my opinion, for the market to chop, and then make a run for this 95 again. That is the primary hypothesis. The expectation for the primary hypothesis is it's likely to be choppy today, and then I expect the market to make another run for the low. Yesterday's high was fairly weak. So we have a very similar secondary hypothesis, which is, again, chop. And do you know why it's chop? It's because we are in this, we are in the meat of the thick of yesterday's trading. The expectation is it'll likely fail lower, chop around, and then start to move up and close the gap and push higher into the FOMC. I do believe that we are likely, given the overnight session, the higher probability play is another attempt at the 1995 below. That's how things are shaping up. I'm over my time. Thanks for listening in. If you have questions, please shoot them over on Twitter, or you can contact me at futurestrader71.com/contact. Again, as always, I hope you find this content useful for your trading. Good luck, and I'll catch you tomorrow. Take care.